What is up, guys? My name is Blake. Welcome to 9 and 5 Investing, my channel where I talk about investments that could be good to make today from a fundamental analysis perspective. All right, guys, so today I'm kind of excited because we're going to be talking about a very controversial company. This is a company that you would have lost a lot of money in if you invested in the IPO several months back. This company is Uber. Uber has seen its shares crater from 45 to as low as 25.58. Now, as Warren Buffett says, when others are fearful, you need to be greedy. That's what I'm thinking about doing here. So we're going to look at Uber, just high level, what they do. Everyone thinks of them as just a ride-hailing app, but they're actually a lot more than that. And then we're going to take a deep dive into the financials, so stay tuned, guys. If you like this content, please subscribe. So what do you think of whenever you think of Uber? Almost inevitably, unanimously, whatever, you're going to think of the ride-hailing app. You know, it's the app that we call whenever we're on vacation, we need a short ride, or, you know, maybe we had a little bit too much to drink and we need a safe ride home. It's great from this perspective. So Uber Rides is actually only one of 5 business segments that Uber has. And it's actually their only segment that's profitable, believe it or not. Their second segment is Uber Eats. This segment is rapidly growing, and for a reason. They're spending a lot on advertising and promotional type of things. Like, for example, with Uber Eats, you might actually get your first one for free because Uber is trying to promote that rather than, you know, just kind of have it grow on its own. They're basically paying for growth in this segment. Third segment is Uber Freight. Basically, this is just where Uber says to one company, hey, would you like us to move your stuff? Okay, we'll pay you this much. They're really emphasizing transparent pricing that does not change once the service starts. I think that this will be huge. This operating segment is one of the newer operating segments, and there's a lot of room for growth here. Uber has the name. I think that they're gonna easily expand in this in the years to come, but they're losing money on this as well. Fourth operating segment, it's gonna be just kind of like an etc. Category. And this includes like the bikes, this includes the scooters that you see. I don't know about you guys, but I live in San Antonio, Texas, and overnight it seems like I just see these Uber scooters, Uber bikes everywhere around downtown. I don't know if that'll ever be profitable or not. I'm not really sure why that's losing money, guys, but it is what it is. And then their fifth business segment, perhaps the most interesting business segment. They're losing a lot of money on this segment, guys, but it's basically just a technology segment. So what they're doing with this, they got so many different projects going on, but the main one is autonomous vehicles. They're pouring money into basically trying to make it to where they have autonomous driving, because their end game is really to take the driver out of the equation on their most profitable, well, their only profitable business segment. If they're able to take the driver out of the equation, their really only expense they're looking at, guys, is going to be like gas. I mean, who knows? By then it might just be mostly electric vehicles, but they're just looking at gas and the depreciation on the car. And besides that, forget it, man. It's all profit. Of course, there's probably more, but you know. Anyway, so those are the 5 operating segments of Uber, guys. Let's go ahead and jump into those financials. So guys, I just want to take a quick look at these financial statements. Quick disclaimer, all these numbers are pulled from Yahoo Finance, except I did annualize the 2019 numbers. So that way we're comparing apples to apples. So obviously that might fluctuate a little bit once we get the actuals in, but it's just a good estimate. So anyway, when we're looking at, I mean, this is one of the most impressive things about Uber, right? Right here. Got annual growth in net sales is insane. So if we're going 2017, you got 106%. 2018, 42%. 2019, on track for 20% about. Of course, these numbers, you know, you're not going to have 100%, 100%, 100%. As the sales get more and more and more, it's going to be harder to have those crazy revenue growth numbers. But 20%, I'd say, is still great. So, I mean, that's the first trend we see. We see really strong sales growth, and hopefully that'll eventually translate into profits, because that's my next point, guys. We're looking at Uber right here. We have a $9 billion, they're on track to hit a $9 billion loss. loss. That is insane. Losing so much money here. Why are they losing that much money? Well, it comes down to two main things from what I can tell. We got this research and development expenses, and then the selling, general, and administrative expenses. So a lot of the times when I'm analyzing companies, guys, I like to look at what percentage of each of these expenses is going into sales. So for example, research and development, for every dollar of sales they have, they're spending 42 cents on research and development. That's basically what that can tell us. And then 81 cents on selling, general, and administrative. Guys, what happened here? We go from 46% to 81%. That's a massive increase. Definitely a red flag for me. Don't really understand what's going on there. Now, I'll tell you the thing that isn't a red flag for me is the research and development expense right here. I actually kind of like this because I think that they're just plowing so much money into developing autonomous driving. So I really don't see that as much of a disadvantage. I think that that's kind of, if anything, it's speculative, but it could really pay off one day. So those are your expenses really, besides your interest expense. And interest expense is pretty stable, really no bad nor no good there. I mean, it just is what it is. It's pretty in line with other years. I don't see it ballooning, and that's a good sign. So then we also got the price to sales ratio. Because Uber doesn't make a profit, we basically have to resort to using price to sales ratio. So all that is you're just taking stock price and then the sales per share, dividing the two and seeing what you come up with. Normally you want to look for one between 1 and 2. In Uber's case, we have almost 4. So that's really not good. It's not as bad as it was when it IPO'd, but I mean, you are paying for some growth here for sure. For sure. And guys, so I mean, when we're looking at the margins, we can kind of analyze this here. I think the gross profit margin, 48%, that's pretty good. I mean, there's nothing to complain about with that. But it's when we get to this operating profit margin, because of this research and development and SG&A expenses, that we're really in trouble here. So Uber's main struggle is going to be, where do we stop investing so much into this or that, and how can we cut our expenses? Because these margins aren't looking good, guys. All right, everyone, next I want to take a look at Uber's balance sheet. Now, right off the top, the thing that sticks out to me here is Uber's had a massive influx of cash. Now, of course, this is because of their IPO, but we go from $6.4 billion to $12.6 billion. Guys, that's a massive increase. And if there's anything I like about a balance sheet, it's a lot of cash, because a lot of cash is going to allow the company to continue performing their operations even if they are at a loss. Then, that's okay. I'm not as worried about them going bankrupt. I'm not as worried about them doing a secondary offering and making the share price plummet. So that's definitely encouraging to me. Another thing I like to look for on a balance sheet is not too much debt. Now, we do have a lot of debt here, but it's not growing at an alarming rate. When we went back on the income statement and saw the interest expense, that's really not bad. So that's in line with long-term debt. I'm not too worried about it. Of course, I don't want to see it grow, but it's nothing that's out of line, in my opinion. Finally, when we're analyzing a balance sheet, I always like to look at a current ratio. This is basically just a liquidity ratio. It's basically saying, hey, if the company was in a bind, if we had a recession or something, would they be able to take care of their liabilities? Do they have enough cash, short-term investments, et cetera, to be able to handle their liabilities? And the answer with Uber is, yeah, absolutely. 2.6. And that's coming from 1.4 in the prior year. So, of course, guys, that's most likely because of the IPO, but either way, I see it as a huge positive. And then we got their debt to equity ratio. So all this is, it's comparing for every dollar of debt, how many dollars of equity do we have? And here we got 1.1, so it's really pretty balanced. I'd say the capital structure is good. Now, guys, here's the thing. I don't put too much weight into the technicals anymore. I used to, but kind of realized how much more important fundamental analysis is than technical analysis. But nonetheless, I do think we can use technical analysis just in our overall, should we buy here, should we buy there? So the thing is, ever since IPO, pretty much, at least starting in July, we have a downtrend. And what do I mean by that, guys? All I'm saying is there are lower highs and lower lows. Lower highs, lower lows. Ever since that July period, basically. And so we could draw this trend line, and we see that it actually recently broke through this trend line. I believe it was on news that they were selling part of their Uber Eats business in India. So we'll see, guys. This could be a reversal of Uber stock. Really, for me, I see a lot of support, which when I say support, I mean there's a lot of buyers around this 28 area. So guys, we have been through what Uber does to try to make money. I say try because they're losing a ton of money. We've been through their balance sheet. We've been through their income statement. We've seen the advantages. We've seen the disadvantages. Again, lots of cash, lots of solid revenue growth. But at the end of the day, they're losing tons of money, guys. I do have a lot of faith in their CEO. Their CEO's name is Dara. He came from Expedia, and Expedia had absolutely phenomenal growth and sales and revenue under Dara. So I think Dara really knows what he's doing. That is actually really like one of the biggest advantages I see in Uber stock when we're talking outside of like the balance sheet and income statement. So there's only one question left to answer after considering all these factors. Should I invest in Uber stock? Well, the answer for you is that you should do your own research. Use this as maybe just a starting point. Read through their 10Q, read through their 10K when it comes out. Really get to know this company before you risk any money in it, guys. After doing research, I think for me, I would hold it as a very small position, maybe 5% of my portfolio, because at this point I see it as a speculative play. I don't see them as a large position in my portfolio because they're not making money yet, guys. They're losing tons of money, but let's say they get the autonomous driving thing down, this company will most likely explode if that happens. I don't think there's much doubt to that. Anyway, guys, thanks for watching. Please like this video, give it that thumbs up, smash that thumbs up button. I appreciate it so much, guys. Subscribe if you see value here, and have a great day.